is going on, YouTube? Welcome in, guys, for another breakdown here with the Everyday Growth Advisors. Good morning, good evening, wherever you are. Hope you're having a good one. Hope you had a great weekend, and let's get this show on the road. Another week here, another dollar to be made. Let's peel this onion and get everything out real quick. Not a lot on the macro front to really update you guys on, except for the fact that you guys should be all watching the bond markets and also money supply in this environment. As I continue to always remind you guys, the liquidity and plumbing of the market is always dependent on the credit markets, where money is flowing in and out, and the bond market is very closely linked to that. Not to mention money supply and the good stuff has already been explained on the newsletter. So make sure you have a read on the newsletter and keep track of what we go upon there, because the newsletter flows into the pre-market live streams, and then the pre-market live streams flow into the live trading sessions on Discord, where we make bank with the team. For those of you that have started 2023 and are still wondering if you should join us, we are up currently about $17,000 on the first week of trading. Pretty decent first week, and we'll continue to do so with more ideas and more profits in this year, hoping to beat my previous record of $1 million this past year. So if you haven't thought about joining us yet, you should probably think about it really soon. Now let's get into the technical updates from SPX, and also the reasoning as to why this craziness happened last week. Pretty much after the jobs report, the market decided to call the Fed's bluff and rally ahead of it. Now, as you guys know, the Fed has been very, canny about the fact that they're not going to calm rates down or pretty much cut rates in any time during this year. But somehow the market is thinking that they need to call the Fed's bluff out on this. And a lot of this rally is because of a bunch of different reasons, not just one reason. The jobs report that came out last week is absolutely not the reason why it rallied. In fact, it makes that situation worse, because a tighter labor market is just going to put the pressure on the Fed worse, right? The market was rallying ahead of earnings expectations this week, as you guys know, and then at the same time on Thursday we have CPI numbers. So a couple things that you guys should be aware of. This week there's a slew of events that are about to take place. And that's going to include, obviously, on Tuesday we have Powell that's going to be speaking. On Wednesday there's a petroleum report that's going to come out. On Thursday there's CPI, there's jobless claims, and then a bunch more Fed chair are going to speak. You also have the Fed balance sheet that's going to be posted, which will tell a lot of things. Not to mention Friday is the beginning of a new earnings season where financials are going to start to report, which is the reason why largely our XLF trade has been doing so well, right? If you guys remember, we called out XLF pretty much around here on the live stream, and ever since then it has been on the $1 rip to the upside. Yep, not really that great, but remember, trading is a boring profession. Don't expect flashy 500% gains every day, because that's unrealistic. So yeah, not really that much was other than that was the cause of the rally on Friday. And then heading to today, we have a little bit more momentum to go. But remember that this level right here, which is the 39.15, is going to be a very key level for SPX. If we fail to break out of this level, then down back we go to backtest 38.75. And if we then fail 38.35, then back down to the Hodor level, which is 3800. So there's a lot of ways that this can go this week. Now, what about the bull side? The flip side on that is if we break through this 38.15, we're likely to go back test 38.50, which is the key point for bulls. And then if we really do break above that, then 4,000 it is. Do I think that that's a possibility? It is absolutely a possibility. But do I think that, it's all going to happen very quickly? I don't think so. Because there's a lot of economic events this week, and it's likely the market's going to create a few fake outs before the actual move happens. So my view is, we might hang out a little bit once we break a couple pivot points. Maybe if we get up to 39.50, we might move sideways until we get more information, more data, etc., etc. So keep your mind open, and don't stick to your bias. The bias will kill you. Be able to switch between your bias. That's going to be the most important thing. Okay. Similar situation on NASDAQ here. NASDAQ obviously still weaker than the counterpart S&P 500. We tried to break below the key pivot bears last week, but we didn't do that. Remember, this was a very strong support. It has been very strong support twice here. And so now it has become a very strong demand zone in this this area here, which is between the 10,400 level all the way up into the $10,700 level, right? So this has been a very key level for demand, for bull, and so they've defended this level pretty strongly in the last week. We did attempt to break out of the box, but not really broken out of it. So it's still kind of in the box with NASDAQ. And obviously this 11,200 trend line resistance is also going to coincide here. So we'll see if we can get above that. Other than that, IWM is actually leading the way here, and definitely something to watch if we can continue to get above these levels here. In fact, more than S&P 500 and NASDAQ, I'm looking at this index because small and mid caps, as I've mentioned on the newsletter, the first newsletter of the year, prefacing what is going to be outperforming in 2023, in my opinion, are going to be small and mid caps that have been decimated the entire 2022. So I definitely want to take some exposure on small mid caps if we get a deep run over here back to the upside. But I will also be mindful of this $180 level, which may act as a resistance. So therefore, I'm not going to play the upside right now because the risk-to-reward ratio is not that great. I'll see how instead we react at 180, if we're going to break above it or start to use it as a resistance, and then I will make my decision based on that. In other news, commodities are rallying again. Gold, which is starting to climb above this level. If gold can break out of 175 and start bouncing above it or hold 175, I will be happy to take an upside position of gold. As you guys know, I took a loss on my gold trade, which was a short trade, which got eaten up by Bank of Japan's intervention policies. Now, sometimes you're just going to have bad trades that brood like this, and there's nothing that you can do to get around them. In fact, I just recorded the weekly breakdown of all of these trades from last week already, so I will be posting that video shortly on YouTube right after I'm done with the stream. In addition to gold, energy is also on the rise, and we already entered that long trade on energy, which I already mentioned to you guys on the previous live trading session, at around 130, and it's currently at 134. So XOP should pay out pretty nicely here. As you guys know, I have a long position in energy after this multiple point touch and go. I will be exiting the trade very, very soon. At 136, I will already take majority of the risk off and let a few runners ride up into the upside. So that will be pretty much risk off sentiment for me once we're getting into the 136, 137 levels, and just be kind of being aware of the risk management here so that we don't get ourselves into any doo-doo. Not to mention, our love child, Baba, has been on a rip ever since we played it. So I had some small trades that I took on this account. I've made a ton of money on Baba in this past 3 weeks. For all of you that have been following this live stream, we've been talking about Baba endlessly, and we talked about the fact that it could continue to run higher. And it can absolutely, and possibly after a pullback, run back up into the 118, 120 level before entering the supply zone, which is up here, and then getting rejected finally. So people who've been trying to short Baba, which by the way, I'm guilty of doing as well, try to hold off until we get into the supply zone before you take any short trades, because as you know, Chinese markets can go really crazy up and really crazy down. So you should be ready for that kind of volatility. Okay. By the way, if you guys have any questions, comments, you want to ask me to break down a certain ticker, go ahead, put it in the comments right now so I can get to it, because I'm about to be done with my analysis in just a second here. What's up, Jared? Welcome into the stream, man. Thanks for being here. Appreciate you taking your time out. So let's look over some of the sectors that I'm really bullish on this week. One of the sectors that I've been talking about since last week is semiconductors. And I've been looking to play this rebound on semiconductors for a couple of trading sessions now, but I haven't quite pulled the trigger on it. Semiconductors is one of the sectors that I'll be looking to play this week after a pullback. Very important that you understand this. After a pullback, please, at the market open, don't go and chase, all of this possible upside here, because the market is going to pull back at some point. So why would you want to pay top dollar on all of this premium that people are chasing to the upside when you can wait for that premium to depress when the prices come down and then take your long trades? Okay, so hand in hand. Obviously, if you wanted to take a proxy to the entire semiconductor market, then you can go long SMH after a pullback and a retouch of 212. If you don't want to do that, then you should probably just go long and then just bear the increased cost of your contracts. But personally, I would wait for this pullback and wait for the prices to get better before taking that exposure to the upside. Okay, but semiconductors are going to be big time on my radar this week if NASDAQ continues to be strong. Okay, as we know, really, really important that you guys understand this. When technology gets strong, the first sector that you should be looking at to play is semiconductors. I've mentioned this 100 times on the live stream. So AMD is one of them that is lagging behind the semiconductors. This might have significant upside if it can break above the $67 or $67 level. Okay, 68 would be ultimate confirmation, but you could start scaling in as quickly as 67 and then add to your position above 68. And that's kind of the way I would play this to the upside. If it gets rejected anywhere here, then downside it is. Wait for the consolidation again and then wait for the breakout. It's really important that you wait. Okay. With NVIDIA, similar setup. It's already broken above, and so this is more bullish than AMD is. Okay. So if you go into the 1 hour chart here, you will see this pretty clearly. We want to see NVIDIA come back down to retest 150 roughly. If you can retest 150, I'll gladly enter a long position there to play this upside all the way up into 156 and even 158 to 160. There's also a small little gap here, but remember, gaps are not guaranteed to close. Okay, so I'll just keep reminding you guys as that happens, because everyone keeps talking about gaps like as though they are the holy truth, the gospel truth, and nothing but the truth. All right, so be careful about that. Now, that's one of the sectors that I'm watching. The other sector that I'm watching is the continued strength in Chinese stocks. And there's just a little bit of untapped upside here, and we saw some unusual options activity that I might want to press. So I'm not going to mention exactly what, because I'm going to leave, obviously, that information for premium members in the Discord. But I've already given you guys a big clue on semiconductors, which I think are a bigger clue and a better clue. And I've told you how to play 2 of them. So I think that that's a good addition to your war chest this week. Just make sure that you don't exert your risk to the upside. Keep it defined till you can get confirmations, and then on pullbacks you add to your bullish position so that you can build a nice risk-off position. Okay. Once again, guys, I wanted to thank you guys from the bottom of my heart for attending these live streams. If you can go ahead and take a second out of your day to smash the like button, I would truly, truly appreciate it. And for those of you that haven't subscribed yet, consider giving us a subscribe. We do this for the benefit of retail traders so that they can navigate these tough, muddy waters and get a good head start to their trading session. But if you don't take a second of your day to like the live stream, then the stream never reaches a greater audience, and then we don't get to help more people. So I would really, really appreciate if you help me out with that. It will take only like 3 seconds for you to do it. Just click the thumbs up button, and that's going to tremendously help this video reach a greater audience. So I really do appreciate it. Okay, so that's Dylan. Good morning, T. Cat. Looks like it's ready for the next run higher after making new all-time highs. I like the sector as well, but it seems overbought, although not quite getting that reading on our side. You'll be very happy to know that we already entered CAT on Friday. So we already took some 260 calls. This was the price discovery play that you are very accurately highlighting. However, we've entered very lightly. And I personally only took 2.5% risk, and I will add more on further confirmation, aka pullback. So I've also gone and dropped this gem as part of our Telegram group. For those of you that don't know, I posted a Telegram group on our Instagram. We are now on Telegram, and sometimes I'm going to be giving some of the tips and tricks of, or rather a few trades here and there, on the Telegram group, because I'm trying to build the Telegram group so that we have a closer connection with you guys. Instagram can be quite, it can feel quite standoffish, and I don't feel comfortable with, just having Instagram as a platform for us to communicate. So you can actually talk to me on Telegram, which is a really nice addition, I think, and I feel. So if you want to get the Telegram add to the group, message me on Instagram, and I'll gladly send the link to you, or I'll post it on our story once again. Okay, apart from this, one other stock that I'm watching, and I'll leave you guys with this one, is Enphase Energy. Big little back test of this demand zone. Yes, on Friday, it did try to close below it, but it looks like it got swept up over here. We really want to watch for a pullback. And Enphase makes really violent moves, so it can really go rally really quickly and then pull back really quickly. And it's been selling off for multiple days now. We're looking for a upside play here after having been sold off so aggressively. So once I get, I already entered, you know, a little bit of a small position here to the upside, but I want to add exposure to the upside here with Enphase sometime this week if I can get that bullish momentum on the market going. Okay, so that's all I kind of have for you guys in terms of opportunities. I've really put it all out there today for you guys. There's a lot of opportunity. All it takes is for you guys to attend the live stream. You get a ton of ideas, you get a ton of direction, you get to ask questions, you get, you know, all the values for your benefit. And not to mention that I distill everything for you so you don't have to really worry about it. Okay, so that's the benefit of attending these live streams, taking your time out to be here. And I really, really, truly do appreciate you guys taking your time out. Okay, would you rather help two healthcare leaders I've wanted to start positions on DHR and TMO? Think there's weakness ahead, so not buying now. Which do you like better? Earnings are 24th and 1st, respectively. Let's have a look. I like questions like this, you know, very like it has everything like it's laid out. So you know, I know your bias and you know everything is. Thank you, Rich. Appreciate the straightforward question. Okay, so DHR. Okay. Ooh, interesting. Definitely, it looks like it hit the supply zone, the demand zone. If you can get a close, okay, so so for those of you that are new to charting or you really, you know, you're not really good at charting, let me give you guys the lowdown of what I typically do. The first thing that I do is I zoom out either on the daily chart or the 4-hour chart and have a look at what the heck is this, you know, ticker doing, right? So we can see pretty much a dip down here below to grab some liquidity and then a deep run and then continued bullish territory all the way through 2020. And then in 2021, there was a pure consolidation and then a run higher again. And now it looks like it has come back down into a bearish cycle. Now, after the bearish cycle, it looks like it moved sideways for a little bit and is trying to find the next leg down. But for now, it seems like it is finding a very interesting channel to trade within, right? So that's your channel. See here, I'm gonna make this white, go about 2 here. So this is the channel here, it's trading between. Then we want to start to establish where our demand zone and supply zones are. Now we know that here it's tending to find some supply and demand. On the bottom of the zone, you can also see that in fact back to all the way here, right here, you can see that this was used as resistance. So now this whole box here, which is now red, I'm gonna make white, is what we call a dual zone. Okay, it's called a dual zone. So this is a very likely scenario for a reversal. This has been a previous resistance. This is now becoming a support. This shows me that demand is starting to come in at a previous resistance level. So this could be a reversal spot. Now I know many of you would probably look at this chart and you'd be like, oh, but look at all the selling volume, dude. I seen a Instagram page that has over 400 or 500,000 followers. And one of the people in the page saying, look at all the bearish volume. And I smacked my head with my palm because I don't understand how people haven't figured this out yet. If you're such a prolific trader, you should know that the volume bars on the bottom here do not tell you if something is bullish or bearish. I hope you guys know this by now. This is like Trading Basics 101. The volume bar on the bottom here only tells you the color of the candlestick above it. It doesn't give you any inclination of whether there is any bullish or bearish activity in the stock, just so you guys know. What does tell you that is the type of candlestick. And you can see that on the daily chart, this is closing with a pretty decent pin bar with the reversal on the demand zone. So we're getting 2 levels of conviction here that might add to our bullish thesis. But at the same time, we have to go and confirm our thesis by looking at the healthcare ETF to see where that's placing. And you can see that the healthcare ETF has been actually on a pretty nice bullish swing. And in fact, it has bounced on this key level, which was a previous resistance as well, which is now possibly turning support at the same time. So this looks like a decent upside opportunity, but now we have to figure out where would that confirmation be, right? So where is that confirmation going to be? You want to find the closest local high, which is around 268.54, right? and that's going to be your confirmation level, okay, to the upside. So you can take a entry position if you want it, and your hands get itchy around 254 or 255. In fact, 255 is probably better. Above 255 is where you can take an entry position with a very small light risk, and then go risk off below your low here, right? And that's going to give you this exposure to your 1:2 or 1:3 risk to reward ratio swing trade, okay? Because what we are looking here is at a swing trade, okay? And then the bounce above the 254, 255 is going to show us further confirmation that this is indeed having some bullish momentum. And ultimately, you want to add majority of your risk right after you get above 269, okay? And so that's the case with this stock here, DHR. I hope that I broke it down for you aptly, and I hope that was helpful. So obviously, there are more layers that you can go into. You can look at the volume profile and stuff like that, but I don't want to spend too much time on one stock. Let's do the other one. There's other things that people are also looking at. Oh yes, Prodigy, I'll get to Goldman Sachs in a second. That's another good, as you can see, I'm watching it for this week. I'll get to that in a second right now. So TMO is the other one. Rich, I hope that was helpful. Okay, so Rich, TMO is also a very similar situation here, except for it has a deeper sweep low here, which is a little concerning, and it has more of a bearish pattern. With this one, I would actually stay out and not take the bullish position on that one, to be honest. I would wait a bit longer for this one, mainly because I see this has a little more possibility for a rejection and a retest of this level here. It looks like it's moving in a downward channel here versus the previous stock, which was bouncing on a demand zone. This looks like the demand zone was way lower created here, and it looks like it didn't quite hit the demand zone but broke way below it. This spoils the supply-demand imbalance, and it's a different structure from the trade prior. So with this one, I would really only take a long position above this local high at 585 roughly. And that also upside would be really shaky until 605. But above 605 looks like a decent play up into 672. So this is a less higher conviction play than the previous one, which was DHR. Just my 2 cents. Okay, so Prodigy, as you were mentioning, Goldman Sachs here. So let's have a look at it. Goldman Sachs is a really nice one. And I posted this on our Discord as a potential opportunity for this week. We are watching it very closely. So it has already gapped up and broke above the box. And I spoke about Goldman Sachs, by the way, on the live stream last week. We've spoken about this opportunity that's been trading in the box. I don't know if you guys remember it, but I did speak about this one. And we're looking at a bullish confirmation for this trade to the upside. If Goldman can pull back today intraday to 350, I would be happy to take some upside positioning on it. The first target being 359 or 358.50. Second target being 365 or 364. And then the third final target being at around 61.8 at 370. That will be a deep run, but remember, earnings are coming up on Friday. I don't know if Goldman's posting. Let me see. Let me double confirm. I don't think so. I actually... hold on. I'll confirm it for you right now. Is Goldman posting on this week? It is not posting this week. We have Bank of America. We have JP Morgan. We have Citibank, Wells Fargo, BlackRock, BNY Mellon. Those are the ones. And First Republic Bank. Those are the only ones posting on Friday. So no, Goldman Sachs not posting on Friday. So yeah, possible run up. It might react favorably on a sympathy play if banks do, put out good earnings on Friday. So I would play the run up and then just let it go into earnings. It's always going to be a 50-50 flip. So not my style. Okay, dokie. I hope that was helpful for you guys. Once again, thank you very much for tuning in. And, honestly, subscribe, hit that like button. I really do hope you can just take a second. And it's like 42 of you here. Can we get the likes to 30? Come on, I pose you guys a challenge right now. If you guys can get me the 30 likes right now, I would really, 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 really appreciate it. Like, there's only 11 more likes to go. If you can get me to 30 likes, that would be awesome. A great thank you send off for me to get into my trading session. Can we get there? Can we get there? 24, 6 more. Can we get 6 more likes? 4 more likes. Come on, guys. 4 more likes. 29. 1 more. Who's going to be the magic person to do it for me? Come on. Let's get it. Let's get it. 1 more like. No way. You guys going to really leave me hanging. Oh, 30 likes. All right. Nice. Thank you, EGA Tribe. All right. That was awesome, guys. Once again, really, really Appreciate you guys. And we'll see you back on Wednesday for the next pre-market live stream. Same structure. Everything is always the same. Just free game and break down everything for you guys. Bring your tickers on Wednesday and we'll do it all over again. Take care. Until then, peace out. Define your risk. Peel them onions. And remember to always plan the trade and trade the plan. Peace, guys. Bye-bye.